Peter, great to see you in studio. Diane, just one second. Do you take offense to the Dr. Doom moniker? You remember the last guy that had it was a huge economist.
Oh, I know.
A household name. So I think
Henry Kaufman. So
you embrace it.
Sure, no problem.
All right. Well, let's get started.
I did apologize for laughing, but the reality is that we can't count the money supply very well, especially in a global economy. Even the Fed no longer counts the money supply and relies on it as a reliable indicator. So although in theory all your talk may be correct, in application it's not very useful for marketers. No, but wait a minute. You're talking about that being inflation for the Fed. The Fed does not fight asset-based inflation. Yeah. So it has come out very strongly in saying we cannot fight asset-based inflation. So for definitional purposes and for people in the market, we have to be very clear about what the Fed is willing to challenge in terms of asset-based inflation versus goods-based inflation.
There's no such thing as asset-based inflation or goods-based inflation. There's just inflation. Inflation can show up in asset prices.
Not according to the Federal Reserve. And if we're talking about what it means for financial markets, you need to be very clear about how the Federal Reserve defines inflation, not how you define
I don't care
inflation.
how the government defines inflation. I care what inflation actually is. The government is trying to confuse the public. The government has a vested interest.
They're not trying to confuse the
public.
Sure
they are.
That's just ridiculous.
No, it's not.
This is a Fed chairman. Have you ever talked to a Federal Reserve governor? Do you even know where they're coming from?
I don't have to talk to them. I don't have to talk to them.
You don't have to know what they're coming from?
Back in the 90s, if you used your definition.
That's not my definition. It's Webster's definition.
But if we've been fooled all along, then the financial markets, which value stocks based on inflation and inflationary expectations, and the bond market as well. I mean, how long have bonds been? You know, we had Jimmy Rogers say they'd never fall below 6%. So the entire global financial system has been fooled by what inflation really was, based on what the U.S.
See, now you've got it. You can get an honorary doctorate in doing.
Is that likely to end that the markets could be so wrong for so long?
Well, that's one of the problems with inflation. It creates malinvestments, it creates overinvestments, it distorts economic thinking, and ultimately we're all going to pay the price for it. Well, no, there has been a lot of...
The situation that you're talking about here sort of is devoid of a whole context of structural change globally in the globalization of the world economy. I just find it a little bit unfair to tell viewers that this is a simplistic way to look at the economy. Yes, it is.
It's not unfair at all. Sure, there has been productivity growth in China, no doubt about it. In fact, one of the reasons
and in the U.S., some remarkable growth in the
U.S.
U.S.
Well, I would disagree there. I think that's more sleight of hands for the statisticians. I mean, if we really had...
Excuse me, I'm from Detroit. Have you been in an auto plant recently?
Well, I can see what our trade deficit is. If we were so productive, why do we have a trade deficit? Where's all the merchandise we're producing?
We still produce a lot of merchandise.
But why do we have a $65 billion a month trade deficit?
We have the highest propensity to consume and invest of any country in the world. We've been growing more rapidly than other countries in the world.
You're right. We have the propensity to consume, but not invest, not produce. We're going to be sucking in more imports than exports, all else equal. We have a more efficient economy. We have, yes. We don't have a more efficient economy.
Yes,
we have a bubble economy. We're borrowing from abroad to consume. That's not efficiency.
No tax increase coming in the next couple of years. Monetary policy is spectacular. We have freer trade than ever before. And not only that, but there are no incomes policies things here. I think Peter's just totally off base, and I don't think it's going to be... I mean, I just don't know where he's getting his stuff.
Well, one of us is off base, but it's definitely not me. I mean, it's not wealth that's increased in the last few years. We haven't increased our productive capacity. All that's increased is the paper values of our stocks and real estate. But that's not real wealth, no more than the NASDAQ was wealth. When you see the stock market come down and the real estate bubble burst, all that phony wealth is going to evaporate. And all that's going to be left is all the debt that we accumulated to foreigners.
Peter, I'm going to take a bet with you on this one. I'll bet you a penny on this one that if you'll sign a letter saying that if you're wrong, you'll sign a letter that you were wrong to me in this, but you're just way off base. There is nothing out there that tells us we're going to have a nice slowdown, but it's not going to be a crash.
All right, let me ask you this. A lot of folks out there point to the housing market and they say that a huge percentage of the jobs created, some argue as much as 30% of the job creation over the last few years has been because of the housing boom, whether it's construction, whether it's mortgage brokers, real estate brokers, etc. And if that all goes away, what happens to those jobs?
There will be lots of things to fill it back up again, Michelle.
Bottom line is?
Bottom line is I'm a big bear on the U.S. stock market. You know, the Dow Jones already is down 20% year to date, priced in gold. That is a tremendous loss of purchasing power. The Dow has lost better than 60% of its value since its peak in 2000.
Sounds like good management to me. Sounds like good management of the economy to me. It's just like a corporation. You know, if we have a huge deficit, I mean, we're making money on the money we're borrowing more than the people who are getting for lending it to us.
No, we're
just
not.
like corporate America.
We've sort of seen that play out, and I think that, you know, it's interesting that you go through a 20-year period where gold is underperforming, you get a 2-year period where gold is outperformed, and every gold bug comes out of the woodwork and wants to tell you how you should own gold and not Google, and I'm not sure I can rationalize that decision.
Remember, gold was in a bear market for 20 years, stocks were in a bull market for 20 years. That's changed, and people have to understand that or they're going to lose a lot of money. You know, I mean, the gold rally, I think, is still early on. I don't know, do you own any gold yet, Art?
No, just my wedding ring.
All right, well, you see, let me know when you got some.
Okay. What do you think gold is saying?
Well, you know, first of all, you just described the U.S. market as being bulletproof, and I think gold is telling us that it's about to get shot full of holes. The housing market is just beginning to unravel. We're seeing the tip of the iceberg here in the mortgage sector, but probably...
How do you put together all this gloom and doom? What data tells you this, Peter?
Well, aren't you looking at the news reports coming out of the mortgage market?
I'm in the middle of it, yeah.
Yeah, aren't you looking at the glut of houses on the market for sale with no buyers and the collapse in the subprime market?
Well, I wouldn't call it a collapse in the subprime market. There's been some difficulty in the subprime market.
Well, it's just starting.
I'm also looking at housing prices, which have had an orderly decline. I'll tell you something that makes a lot of sense to me. You talk about the collapse of the NASDAQ and that incredible bear market that we had. Those are usually once-in-a-lifetime events. And you're suggesting that in very short order, less than 10 years later, we're going to have another one?
Well, in a different asset class, sure, in real estate.
I think I might just maybe take a little issue with the other guest here. I mean, in that, the whole concept of this U.S. economy is teetering on recession. You know, with all due respect, I think is absurd.
It's not
because
absurd.
It's completely absurd.
Well,
because the stock
market.
Excuse me, sir. Let me finish. I think that stock market, generally speaking, does not give false positives or false negatives on recession.
Where were you in 1999? In 2000, the stock market doesn't give false signals?
Well,
of course it does. You're starting to see it in the housing market. You had a lot of people over the past 4 or 5 years borrow a lot of money that they can't afford to repay. They were able to keep it together for a while on these artificial teaser rates. But as these rates are starting to reset, you're starting to see what's happening in the housing market. It's going to throw through to the entire economy, and consumer credit's going to dry up. And we're going to be in a recession, and it's going to be a devastating recession. It's not just going to be a few quarters of negative growth. It's going to last for years.
Stephen, jump in here. What do you say? He's saying it's a disaster.
Well, you know, I really don't see this economy that he's talking about.
Why hasn't it happened yet? Why hasn't the collapse happened? Why hasn't the skeleton, the subprime skeleton, come fully out of the closet and scared the living daylights out of everybody?
It takes a while. It takes a while for this stuff to filter through. Look at how long these hedge funds were able to pretend that these subprime debt securities that they hold actually have value or close to par when they're really practically worthless, if not completely.
And now
worthless.
that they're not pretending anymore, nothing's happened.
No,
the world hasn't ended. So one of these days, we're just going to have to stop predicting that this same old thing is going to cause the end of the world.
It's production that's
so
important.
let's not talk about America being a burden on the world. America is the shining beacon of the world.
No, we're not. Right. Production is in many cases the low end of the totem pole. The high intellectual content is created here. There is only one Microsoft.
No, then why do we have a Why do we have a $60 billion a month trade deficit if we're producing so much stuff?
And that
because we're so rich we can afford it.
No, that's not.
Because our money is so valuable, because our credit is accepted worldwide, that billions of peasants worldwide are willing to work in poorly lit, poorly ventilated factories just to get our paper money, because it's that precious.
No, our paper money is precious. We print it. It costs us nothing. Look, the world is going to wake up to this con. Well, how are the consumers served by having the value of their money, the value of their wages, and their savings diminished?
I don't think that has any impact. The Fed doesn't have any impact on that at all.
Of course it does.
Two things.
Those who aren't familiar with you, this has been your prediction for how many decades now?
Well, not decades, but it's certainly been my prediction for the last 7 or 8 years, and I've been dead on right.
You have?
Sure. Look what's happened since 2000.
Week, Lehman Brothers gone. Merrill Lynch bought. AIG lent $85 billion from you and me. New rules for investing. $180 billion pumped into global markets. Right now, we do not yet know the details of what this monster bailout actually is, only that it will be massive and costly, and in the short term may have saved the economy from utter disaster.
About everything that Alan just said, but there is a key difference between them. Peter Schiff, you think that, in fact, a recession, a deep recession, is necessary, not only inevitable.
Absolutely. You know, the root of the problem is in response to the most irresponsible monetary policy in U.S. history, American citizens borrowed and spent trillions of dollars. And now the institutions that loaned the money are going broke because we can't pay it back. And this bailout isn't going to change the fact that we're broke. As a society, we need to go back away from borrowing and spending and towards producing and saving again. And the government is trying to interfere with the free market. And if they succeed with this bailout, what they're going to do is bring on a crisis far greater than the one they're trying to avoid. They're going to destroy the dollar. And then we're going to see hyperinflation. We're going to see prices and interest rates going sky high. And there's nothing we're going to be able to do about that.
Stephen?
I don't know where to start, Ellie. For one thing, the bailout doesn't necessarily have to be a losing thing. I mean, the headline in Barron's today is that actually the Treasury could end up making money on this bailout. Now, it's $700 billion. That's a huge number. But do you know how much we've already lost because of this crisis in terms of lower equity value in our homes, lower stock prices? It's in the trillions. So how does $700 billion all of a sudden counteract trillions of dollars that's been lost? How does $700 billion that can turn into a profit for the Treasury somehow turn in? Why are you laughing?
Well, because
I mean, this comes right out.
And what should we? Peter, you don't think that we can step in here, that a big bailout is suddenly going to make this right?
No. First of all the smaller bailouts along the way have made the situation worse. All the government can do is create inflation. The government doesn't have any money. They're going to print it. Now, they're going to try to con the Chinese and the Japanese and the Saudis into loaning us more money, but they're done. We've borrowed and spent ourselves into bankruptcy. That's the problem. It's the fundamentals of the economy. You know, I wrote a book called Crash Proof, How to Profit from the Coming Economic Collapse. The economy is collapsing exactly the way I wrote that it would, but also in that book, I was afraid that the government would do exactly what they're doing now. And this is worse. We're going to die from the cure, not the disease. Can't keep it strong, but it can make it a lot weaker. These problems are severe.
How is
The
it
free
making it
market.
weaker?
Look, the free market can solve them. We can't solve them with a printing press.
How
You want
is
to
it making it
go
weaker?
to Zimbabwe and see how well it works.
Peter's comparing us to Zimbabwe.
No, yes, it is.
Somehow you may not like George Bush, but he is not Robert Mugabe.
No,
he is not Robert Mugabe.
Look,
they're a little bit different. A little bit different.
Government doesn't work. Making the government bigger, printing money, buying up debt, it's not going to solve the problem.
This doesn't make any sense. Look at Barron's today. You should have read it before you came in. I hate to tell you. The lead story in Barron's today is the Treasury Department, if this works out, will make money with this $700 billion.
The government is saying
Did you read the article? No, Barron's. Barron's has said you don't care about Barron's, you don't care about the financial media,
I know
you
what
don't
I've
care
been
about
saying.
Barney Frank.
Peter Schiff, all the spending.
Well, obviously that's going to make a bad situation worse, but we're even further out on the leverage limb than we were a year ago.
What is this debt obsession?
And rates are going to go up. They can't stay down.
Debt is the only measure of how we're doing.
The Fed has parked a lot of bonds on the books of the banks, and they're sitting on them. Let's not say we're all leveraged out. It isn't like, you know, the consumers haven't been working down their debt and all the rest of that.
They've gotten started, but you know, they're nowhere near in good shape.
How long is it going to take,
We've been on a spending binge for a generation.
So how long does it take for the consumer to get back to where it was?
Spend money for a generation? Come on.
No,
this
we've
is
got
America.
to save money. We've got to get our savings rate up to 10 to 20% and keep it there for a long time.
But Peter Schiff,
Peter Schiff, did you look at the GDP data that was released this morning? There was an amazing thing which I want to throw out as a challenge to you. Do you realize that the consumption share of GDP went up, hit all-time highs this last quarter? What that means is that this theory that the consumer is just completely falling off a cliff and will never come back, and we're going to be in 25 years of scrimp and save, has simply not shown up one iota in the numbers. So it's an interesting theory, but as scientists, it's not in
we're digging
the
ourselves
data.
into a deeper hole. This is going to come to an end. You can't run an economy on spending other people's money. You run an economy on savings and production. We've got it completely backwards, and that's why we're in trouble.
Don Luskin.
I want to know, what is the China story if the U.S. isn't there to be a customer? The idea that all of a sudden the Chinese are going to turn into a consumer society is just simply wishful thinking. There's not the slightest bit of evidence for it. It's an idea, it's a theory, it's interesting, it's a great narrative, but where's the data?
They can buy their own stuff. There's 1 billion Chinese. As long as their government stops buying our bonds and stops suppressing their own currency, you're going to unleash massive purchasing power in China.
That's a big... Greener than ever before. This is an industry with an outstanding track record. This is an industry that has helped build the middle class. It is worthy of investment. The Chrysler bailout 30 years ago paid off. This investment will pay off.
You know,
How can you say it paid off? We didn't get 30 years of productivity from it.
Chrysler is back in bankruptcy. How do you know what Chrysler would look like if the government had stayed out of it? If you think these companies are such good investments, you put your own money into it.